The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. 5 days a week from 3 to 4 Eastern, just in front of the Tom O'Brien Show. 877-927-6648. That's the number to use to get through. Don't forget, if you can't listen to the show live, you can pick it up as a podcast on iTunes, and one great way to listen to the show is on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can listen to the stream crystal clear that way. And don't forget about Tiger TV on the homepage of tfnn.com, Channel 1. The show is carried live. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but you also get to look at charts live right along with me. And Tiger TV, also viewable on your handheld device as well. Just open your smartphone browser, tfnn.com, and then over on the top right-hand side of the homepage, you'll see a box with 3 cell phones in there, and just click on that box, and it'll start streaming on your cell phone. All right, another resilient day for the market here. Of course, headlines over the weekend. Cyprus is going to receive 10 billion euros. About 12.9 billion US dollars of financial aid, but not without a levy on private bank deposits. Apparently banks are going to be closed in Cyprus until Thursday or so. It's the first time that depositors have been asked to contribute to a bailout during the Eurozone debt crisis. At one point today, the Dow was down about 100 points, maybe a little more than 100 points. Early in the session, it hit a low of 14,404. It is almost 100 points off of that low set earlier today. Dow last trading at 14,500. In fact, let me just update it here, get a fresh quote. 14,491. The Dow is down about 23 points. Let's check in on tech stocks here. Take a look at the NASDAQ composite. You see that bounce right off the 10-day moving average for the Dow. The NASDAQ composite hit an intraday low of 32.11. Got only about 11 points from that 20-day moving average. NASDAQ composite is back up near its session high, only down a little more than 5 points to 32.43. So resilient performance for the NASDAQ as well. And then finally the S&P 500 large cap index, benchmark index, right now pierced its 10-day moving average earlier in the day. It is back above the line. Again, trading near its session high, down only about 5 points to 1556. Remember that options expired on Friday, and so volume is tracking much lighter, not surprisingly, than Friday's levels. Volume NASDAQ on Friday very heavy at 2.16 billion. We're tracking about 15-20% lower than that today. Volume on the New York Stock Exchange Friday very, very heavy, 1.68 billion shares. We're tracking about 50% lighter than that today. Headed into today, again, the market had really not been flashing a whole lot in the way of sell signals. 2 higher volume declines for the S&P 500 and NASDAQ composite. That is a great way to monitor underlying market health when you're in an uptrend. Just pay attention to days when indices close lower in higher volume. That's a sign of subtle institutional selling distribution. And when you start to see days like that multiply, increase in frequency, normally 5 days over a 2 to 3 week period, that is going to be enough of a signal to start raising cash and get defensive But again, headed into today, only two distribution days for the S&P 500 and NASDAQ Composite. One of those days on the S&P 500 was actually a stalling day, where that was on March 6th. Where, and in fact, I can point to it right here, March 6th. That was the day when the S&P 500 closed barely higher, but there was volume. The S&P closed slightly higher, volume rose from the prior session, but it churned. It didn't make any meaningful headway despite the higher volume. That is what stalling action is. You tend to see that near highs. But so far today, market doing a pretty good job shrugging off really what looked to be kind of a minor headline over the weekend. But again, you're just talking bailouts in Europe. It gives the market a reason to sell off here. Several upgrades today to talk about. Let's start with Verizon VZ. Citigroup upgraded Verizon today to buy from neutral, raised its price target to 54 from 46. Verizon, just another example of an extended stock here after a recent breakout in February, over $45 a share. Stock now trading at $48.90, up 1.8% on the day. Citigroup cited a favorable buyout scenario of Vodafone's stake in Verizon Wireless as a reason for the upgrade. Also had a couple of Dow components upgraded today. Let's start first with UTX, United Technologies. Upgrade really hasn't done much to help shares today, but it is holding gains nicely here, down 4 cents to 93.24. Citigroup upgraded United Technologies to buy from neutral, citing good growth prospects ahead. And HPQ, Hewlett Packard, boy, this has been an amazing performer here, upgraded to overweight by Morgan Stanley. You see the stock is up 2.8% today to $22.80. Has been an incredible move for HPQ. No doubt about it, it's turned into one of the market's stronger performing stocks, as a matter of fact, after its gap up on February 22nd. Cleared a swing point of 1745, and it just has not looked back. So Meg Whitman over at HPQ looking pretty good these days as CEO over there. Also wanted to take a look at ValueClick, VCLK. This is a name we've mentioned off and on the show. Has just been a monster performer. ValueClick, another stock that recently gapped up on better than expected earnings. That gap up was on February 14th. Stock is up another 9.4% today. Just an incredible move here by ValueClick. It is a digital marketing firm. And story here is that Jefferies raised its rating on ValueClick to buy with a $35 price target. They really have high praise for new CEO John Giuliani. Short interest still relatively high in ValueClick, so part of its recent move, I suspect the big reason why it gapped up, I mean, it did report decent earnings on February 14th, but short interest has always been high in this, so maybe short still covering some positions here. But another extended stock here, hard to do anything with it. You can't buy it up here. It needs to base and consolidate gains, but good solid day of outperformance for ValueClick. Check in on the financials here. They had been lagging the market for most of the day, and the XLF has fought its way back after earlier losses. It's down 12 cents now to $18.33 after hitting an intraday low of $18.17. So XLF definitely trading in a tight range here. Last check, I think Morgan Stanley was taking the hardest hit among the financials, down 1.9% to 23.14. But look at what it's doing, just firming up here at its 50-day moving average, trading near its high after early weakness. And let's see here. Goldman Sachs also holding above its 50-day moving average as well. So a lot of these financials, after massive price moves since December or so, still not showing signs that they're ready to breakdown yet. We did have some economic data earlier today. Not much, just one report. National Association of Home Builders Wells Fargo Housing Market Index came in at 44 for March, down from 46 in February. Despite March's drop, the sentiment level among home builders is still up 57% from a year ago. How are the home building ETFs responding to that news? Let's check in on the Spider S&P Home Builders ETF. Still going strong here, holding near highs. It is up 8 cents today, 0.3% gain to 29.78. Two ETFs in the home building space, the XHB, that's what we're looking at now, the Spider S&P Home Builders Index. This has home builders in it, but it's not a pure play home building ETF. In fact, the top three holdings for XHB, believe it or not, top holding is Tempur-Pedic, TPX. See what Tempur-Pedic is doing today. Another stock showing excellent relative price strength in the market, up 2.5% to 46.80. MHK is the second highest weighted holding in the XHB. That's Mohawk Industries, also holding near highs. And Lumber Liquidators, hardwood flooring retailer, also holding near highs. So you have the XHB, which has got a lot of ancillary housing plays, and then you've got the ITB. Let's take a look at ITB here. This is the iShares U.S. Home Construction Index Fund, still holding near highs here as well. It is up a penny today to 23.91. Some top-rated stocks here, or the three top-rated stocks in the ITB are Pulte Group, PHM. Let's take a look at some of these home builders here. Back above its 50-day moving average, trying to flirt here with a breakout over 2050. Just hasn't gotten going yet. Needs a little more volume. So Pulte Group is the top-rated stock in the ITB. After that, you've got DHI, which is D.R. Horton, one of the better performing home builders as well. Nice bounce off its 50-day moving average recently, holding near highs. And you also have Lennar. So financials, home builders, still looking pretty good here. Nothing really in the way of sell signals yet. Nothing really in the way of sell signals for the broad market as well. Over the weekend, boy, the bears were just, clapping their hands and saying, see, I told you, the futures were pointed lower, and this is still a market where the bulls are in control. Still important, though, to pay attention to higher volume declines in the major averages. So we're going to keep talking about that in coming days, because if you start to see distribution, increase in frequency, and you start to see maybe it's the home builders, some failed breakouts recently, maybe they cut through support, start to see signs that institutions are selling stock, that's the time to get defensive, but no need to be too quick on the trigger here. As far as the rest of the week, we do have more housing data for tomorrow. On Tuesday, housing starts, building permits for February. Starts expected to be up a little more than 2% to 910,000 units. We've got the FOMC rate decision, conclusion of a Fed meeting on Wednesday, Thursday, weekly jobless claims, existing home sales for February, and the latest reading from the Philly Fed. That is on Thursday. Stick with me, folks. Coming right back. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Pretty big move in the U.S. dollar today. U.S. dollar index, you can see on Tiger TV, under pressure for 2 straight days headed into today. The dollar index hit a high of just over 83 on Friday, reversed off its high, closed near its low on Thursday, I should say, and then more selling in the greenback on Friday. It closed at 82.13, but it is bouncing back today rather significantly, up at 82.62, up 0.4% on the day. Bond yields, 10-year note back below 2% to 1.96%. We can take a look at the chart of the 10-year yield and see that it's paying a visit to its 50-day moving average here. So if it finds support, one might expect to see bond yields head higher again in the near term. 30-year bond yield right now at 3.19%. Hasn't quite gotten down to its 50-day moving average, but bond yields under pressure for the second day in a row. April gold up $12, 0.8%, settles at 1604.60 an ounce. 1604.60 an ounce. Haven't checked in on the GLD, Spider Gold Trust here. It has been working its way higher over the past 5 or 6 trading sessions. First resistance level is going to be that 50-day moving average at 158. Right now the GLD is at 155.31, up $1.31 on the day. And crude oil today ends at $93.74 a barrel, up 29 cents. Some heavy volume gainers today. Let's stay in the oil and gas sector. Bonanza Creek Energy just keeps on flying here, up another $1.69 today, 4.2% to 41.76. Let's take a look at a weekly chart here for Bonanza Creek. And this is kind of an interesting technical setup here. You can look at it a couple of ways. First of all, what I have highlighted here is that after its breakout here, November, December, it had 3 quick pullbacks. And you can see if you count each week, you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's like a 10-week ascending base. Now, each pullback in an ascending base, there are 3 pullbacks where each low holds above the prior low, so that definitely fits the description. But the 3 pullbacks need to be between 10 and 20%. The 2 pullbacks up here were greater than 10%, less than 20%, so that fits. This one here was only about a 7 to 8% pullback, so it's not quite, doesn't quite fit the definition of an ascending base, but it does have the look of it. So you get a breakout and then 3 pullbacks, basically between a 9 and 16 week period. So you had that here, and then an eventual breakout over 35.25. The other way to interpret this structure is basically just a breakout from a 3 weeks type pattern. You see this down week here where it hit a high for the week of 35.25. That was the swing point, and then for 2 weeks in a row, it showed a weekly close that was within 1% of the prior week's close. So either way, it's a breakout over 35.25. The stock is extended. At this point, it is trading at 41.76 right now. Again, up 4.2% on the day. We did hear from Bonanza Creek last week. It did report earnings, a really nice quarter with earnings up 150% to 40 cents a share. Sales up 110% to 73.6 million. They have a significant presence in the Rocky Mountains, and they're based in Denver, Colorado. Small cap oil and gas producer. Let's also take a look at SLCA. This company priced 8.5 million share secondary offering last week at 22, I believe it was. And you're seeing the stock firming up again at the 50-day moving average here. SLCA, U.S. Silica Holdings, outperforming nicely today, up 3.9% to 22.54. SLCA supplies commercial silica that is used in fracking. Again, that's the process of injecting fluid into the ground that has silica in it, and this fluid is injected with high pressure, and it fractures shale rocks. That helps releases natural gas and allows natural gas to flow more freely within the shale. So interesting company here, and firming up at its 50-day moving average after pretty intense selling pressure last week. Again, news of a secondary offering caused the stock to fall from 27 down to about $21 a share. All right, folks, headed into break number 2. We'll check in on the markets when we come back. A lot more news items to get to. We'll do that when we come back. Thanks for tuning in. Ken Shreve with you on Breakout Investing. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
The euro is weakening and the U.S. dollar is strengthening. As we head into the close here, about a little more than 25 minutes left to go in Monday's session. That has caused the Dow now to be down about 53.5 points to 14,460. Probably seeing the rest of the major averages follow suit here. Let's take a look at the NASDAQ Composite. We'll see that it is down close to 13 points now, still trading in the top half of its range after hitting an intraday low of 32.11. Tech index right now trading at 32.36, and the S&P 500. S&P 500 is also under some selling pressure late. It is now in the bottom half of its trading range, trading right at its 10-day moving average at 1551. S&P down close to 9 points to 1552. Small M&A news today. Laser hair removal firm Cynosure, CYNO. Let's take a look at CYNO. This is the acquiring company. They announced plans to buy fellow laser hair removal firm Palomar Medical Technologies, PMTI. Small deal here for $294 million. According to a press release from Cynosure, the two companies combined have an installed base of 20,000 machines in more than 100 countries. Investors of Cynosure don't like the deal. CYNO, the stock is down 4.6% to $27.14, trading just underneath its 50-day moving average. Let's take a look at Palomar Medical Technologies. This is the company that's being acquired. It has been a solid price performer. Who knows, maybe in anticipation of an acquisition. It is up 4.4% today to $13.17. Trying to decide here what is more volatile, the VIX or shares of Intuitive Surgical. Let's take a look at the VIX here. See a big move higher for the VIX. It's trying to get back above its 50-day moving average here. It has really been slaughtered over the past 3 weeks or so. But the VIX right now up 19% one-day move for the CBOE Volatility Index. It is last trading at 1346. Let's take a look at shares of Intuitive Surgical. It has been almost as volatile as the VIX. On February 28th, the stock fell 63 points. It was very next day up 43.5 points on March 1st, down a combined 49 points on March 13th and 14th. Right here, and today it's up 24 points, 5.3% to 483.60. This is not a stock that you want to be touching here with volatility as high as it's been. There's still sellers have been in Intuitive Surgical recently due to concerns about the effectiveness of its Da Vinci robotic surgical systems used in prostatectomies, hysterectomies, but just some bad press coming out, and that has brought sellers out in the stock. I mean, the machine does continue to enjoy strong demand. In fact, when Intuitive Surgical last reported earnings, I think I mentioned last week that the company actually delivered accelerating sales growth, which in recent quarters sales growth had been decelerating, but in the fourth quarter sales were up 23% from a year ago to $609.3 million. So this is a stock that appears to be the institutions are in control here for now, so it's always tough buying a stock amid waves of institutional selling, and that has been pretty much what's been going on in Intuitive Surgical since February or so. So probably want to let this one settle down and wait for the headlines to sort themselves out. Let's take a look at some other big movers today. Starting with Shutterstock, SSTK. This is a very interesting company. It has always been on the thin side. It has an average daily volume below 100,000 shares, market cap of $1.4 billion. Let's take a look at shares of SSTK here. There's Shutterstock. You can see a beautiful gap up for Shutterstock back on February 22nd. A lot of stocks seem to gap up on that day. February 22nd, beautiful breakout from a base over $28 a share. Here it is at $41.43, very, very extended in price, but up another 3.6% today. This company operates an online marketplace for commercial digital imagery. And again, love the company. Like the top-line growth that the company is showing in recent quarters, and also like the growth prospects. This year, annual earnings should be up 39% from 2012, and in 2014, looking at annual earnings growth of 31%. So high multiple stock, but earnings power here, and that is what is fueling price performance. If you did not buy on the gap up here, this is another example. There are the market is teeming with stocks like this right now. Gaps up in price. They're too extended now to buy, so you just have to wait for a consolidation, wait for a better entry point, and that's why a lot of people want to see this market pull back, come in price, because if it doesn't happen, you're just going to have a lot of extended stocks out there getting more and more extended, and when they do eventually come in, it's probably going to be a pretty ugly situation. So just be careful not to chase Shutterstock. Good fundamentals here, though. Excellent relative price strength and a recent new issue. Just a good example of one you want to keep an eye on when it does form a base. This is one that I would not expect a meaningful pullback correction. Maybe pull back 5 to 10% off its highs, move sideways, and then you get an opportunity to pick up some shares. Remember, we had Keir McDonough on last week. He was talking about Cree. This is another stock that really just needs to kind of move sideways, consolidate here. This is a company that's taking advantage of an LED, light-emitting diode market that is on fire. Fundamentals very strong at Cree as well. Bright growth prospects. Another company that should be able to deliver annual earnings growth of 35 to 40% this year and next. And you can see stock is up 1.6% today to 53.47. If you look back at recent earnings and sales growth here, at least when it comes to sales growth has been decelerating in recent quarters. So this is what would be considered a turnaround story, because sales growth is expected to ramp back up here. Here's a look at a weekly chart for Cree. And when that earnings growth ramps up and sales growth ramps up, that's when stocks really tend to move here. So it's been a big move for Cree since the beginning of the year. But again, you get some nice sideways movement here. Maybe it holds above, $48-50 a share. Could get another opportunity to get in here. For now, you don't want to chase. Netflix is another one. This is if this market rally is going to continue, you're still in the bull camp here. Keep an eye on Cree. Keep an eye on Netflix as well. This is just beautiful, tight, sideways trading here. You're looking at a swing point here of 197. Netflix right now trading at 185.72, up 0.5% on the day, but really trading beautifully here, holding above its 10-week moving average. I would expect that 10-week line, even if the market does come in a little bit here. Netflix, we'll see if it can hold that 173 level, but beautiful technical action, tight sideways trading after a monster move for the stock right here. If you're watching in Tiger TV, Netflix definitely one to keep an eye on as well. And LinkedIn is another one. Relative price strength has to be paid attention to here. Would be great to be able to pick up LinkedIn on a pullback to its 10-week moving average around 154. I think there's a possibility that could happen. If it doesn't get down that far, this is another example of a stock that is acting so strong in the market. Just look for tight sideways trading from here. It may not get down to that 10-week moving average. That would be a pullback of about 20 points, a little less than 20 points from where it's trading now, 173.86. But the earnings report that LinkedIn came out with just a few weeks back was very, very strong, much better than what the market was expecting. So want to keep track of these stocks, even though we're in an uptrend right now, and even when the market starts to head lower, keep track of stocks that are falling less than the market. So on days when the market's down 1%, what stocks are down 0.2%, 0.3%, 0.4%? Look for stocks holding up the best in a weak market. And I think that you'll find that LinkedIn, Cree, Netflix, names like this are probably going to fit the bill. We do have some earnings reports coming up tomorrow. Let's take a look at Francesca's FRAN. This is a little-known retailer. They operate women's boutiques. Technically, not a great-looking stock here, but there's fundamentals are very strong at this company. Now, when you evaluate a stock, you want to make sure that fundamentals and technicals in line, or align, I should say. Fundamentals should support technicals. Technicals should support fundamentals. What you have here right now is initial resistance at the 200-day moving average. It's also a stock that is still a ways from its 52-week high. In fact, about 25% off its 52-week high. So this is looking like a tired stock, but another strong quarter of growth is expected at Francesca's. Earnings up 50% to 30 cents a share. Sales up 38% to 84.9 million. So look for earnings tomorrow from Francesca's Holdings. And we also have WSM, Williams Sonoma. And Williams Sonoma, another stock that has been moving sideways basically since September, October, thereabouts. Pretty significant resistance at that 48 level. It is up 35 cents today to 45.36. Not near a breakout point yet, but they're going to be reporting earnings tomorrow. Earnings up 10% to $1.29 a share. Sales up 10% to 1.4 billion. So a couple of retail names set to report on Tuesday. On Wednesday, the transports have really been rocking and rolling. We'll hear from FedEx on Wednesday, and you can see it's holding near highs, but transport's getting hit today, underperforming. FedEx down $2, 1.9% to 107.05. Key support right here is its 50-day moving average, just over 103. Look for earnings from FedEx to be down 10% to $1.39 a share. Sales up 3% to $10.85 billion. Also on Wednesday, we're going to hear from home builder Lennar, L-E-N. Mentioned Lennar as being one of the top holdings of the ITB home building ETF. Lennar reports on Wednesday. Earnings up 100% from a year ago to 16 cents a share. Sales up 24% to 898 million. Lennar working on a base here, holding above its 50-day moving average. Again, home builders as a group still not showing much in the way of meaningful sell signals. So to look at some earnings reports, and then let's not forget about Lululemon on Thursday. Lululemon at one point was underperforming today by quite a wide margin. This has a stock that could be a short here. May not be too late to short it. Technicals very, very weak here. Underperformed the market broadly on Friday, following through to the downside today in very heavy volume, down $2.56 today, 3.7% decline to 65.92. Now, some price levels you want to watch for Lululemon are its recent lows here, 65.19. Pretty strong support in that 65 area, but it is getting another point, and it could break below these lows that were set back in February, January, all the way back in November. So 65 is sort of that floor that you can see right here. And in fact, I think I may have a weekly chart for Lulu. Pointing out that, let's see here, there it is, Lululemon. Yeah, so you can see that that floor, and the stock right now is flirting with a break, below that 65 level, which would open up a move down to 50, 52, 53. So earnings are coming up Thursday. A lot of trepidation ahead of earnings. Another strong quarter of growth is expected. Earnings up 45% to 74 cents a share. Sales up 30% to 482.8 million. But Lulu, despite its sluggish price performance, basically for all of this year, it still sells at a fairly lofty multiple due to strong growth. But the way the stock's been acting, obviously concerns about growth ahead. And if it's a 35% grower that's going to start growing at 25, 30%, that's where you get that multiple compression, and it could be happening right now with Lulu. All right, folks, we'll put the finishing touches on today's show when we come back in about 3 to 4 minutes. We'll also check the markets one last time. Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Some selling in the market late here. Right now, the Dow Jones Industrial Average trading in the bottom half of its range here, down about 66 points to 14,448. Hitting an intraday low today of 14,404, which is pretty much right where its 10-day moving average is. So the Dow really not looking like it's about to break down in the near future. Take a look at the NASDAQ composite here. And we'll see that it is also, well, it's actually still holding in its session, or in the top half of its range today. Right now, the composite is only down about 13 points, 0.4% to 32.36. It hit an intraday low of 32.11, so it's about 25 points off its low. And the S&P 500. Check in on that as we head into the close here. S&P 500 large cap index trading in the bottom half of its range as well, right along with the Dow, down close to 10 points to 1551. Mentioned volume on Friday. Options expired, so you had elevated volume. Even if we project volume out to the close here, it looks like we're still could see about 1.8 billion shares trade on the Nasdaq, which is on the heavy side. Of course, it is going to come in lower than Friday, but pretty good volume in the market today, even though it is tracking lighter than Friday. Very heavy volume on the New York Stock Exchange on Friday, 1.68 billion shares. Right now, looking like we're going to trade close to 800 million. So if we project out, about 1.8 billion on the Nasdaq, 800 million on the NYSE. So, not ready to give up on this rally yet. The market kind of feels like we're getting ready to get into this kind of volatility stage where you're going to see these, 15% moves up and down in the VIX and volatility in the major averages. What I know right now is that, there's just a lot of extended stocks out there. It's a point that I'm just going to continue to talk about on every show. There are just too many extended stocks out there. Yeah, the market's in an uptrend, but what are you gonna buy? I mean, you're buying off the 10-week moving average. You do that 10 times, 5 are going to work and 5 aren't going to work, so you got to really just hope for a little bit of a pullback here, mild consolidation. Give stocks time to form good bases. Let some sellers get shaken out of this market, because buying at the 10-week moving average is okay, but it's not nearly as good as buying after a period of pause for the market. And that's why many people are kind of waiting for a pullback here. But again, sometimes the market does what's least expected here. So what we know right now is that the market trend is upward until proven otherwise, and we're going to continue to ride that trend. If you have long positions on, there's no reason to take profits too quickly. You have these some big winners since early January that are still working. No reason to head for the sidelines yet, because you're just not getting meaningful sell signals in the market. Shares of Apple. Wow, we went about 55 minutes before we talked about Apple, but it is outperforming it nicely today, approaching a key resistance level here of 463. Apple right now at 456.48, up $12.82 on the day. The rumor here is that there's becoming more likely you're probably going to get a nice dividend raise from Apple. Apparently, Bloomberg reported today a survey of 6 analysts said that Apple could raise its dividend by as much as 50%. So Apple trading right now at 456, again, approaching significant resistance at 463. I suspect that might be a tough level to overcome. Could happen, though, so one to keep an eye on. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in, folks. Always appreciate it. See you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Enjoy the rest of the day.